Rob Price here from Sound Money. So one of the questions that I have received a lot recently is about the correlation between Bitcoin and traditional equity markets. So that's what I'm going to cover in this video. In particular, I'm going to talk about why the stronger correlation exists. What is the trouble there? Of course, there is some consequence to it. I'm also going to cover why it doesn't worry me. And then lastly, even if the correlations were to remain strong, why I'm still not particularly worried about this higher correlation between Bitcoin and traditional financial markets and equity markets in particular. So, what I'm showing you here in this first graph is just that correlation. What I'm showing you there is between Bitcoin and the S&P 500. You could look at it, Bitcoin to the NASDAQ. That'd also be a pretty similar relationship. You could also look, of course, at the broader crypto markets versus the S&P 500 or the NASDAQ. Crypto markets tend to have a very strong correlation with Bitcoin itself. So I'm just going to focus on Bitcoin for this conversation. And as you said, as you can see, it's a strong correlation. So, what is the concern there? Well, one of the selling points for an investment into Bitcoin and crypto markets is the uncorrelated nature of these returns. Some of the time the correlation is weak, and that is a positive portfolio component. If you combine an uncorrelated asset with the ability for that asset also to have strong expected returns, those two characteristics can have particularly profound consequences in a portfolio construct, enhancing risk-adjusted returns dramatically. And that's what you've seen, historically. If you had, say 1%, 2%, 3% allocation to Bitcoin within a diversified portfolio, the numbers historically would look incredibly positive. So, of course, a higher correlation does, to some extent, will call into question that positivity. So why is this correlation increasing? So the primary reason here is that the adoption of Bitcoin and crypto markets is increasing, right? The penetration of this asset is increasing. And what I'm showing you there is some data from Statista. It is just showing adoption of crypto over the last few years, and you can just see it's increasing. But we know that adoption of crypto and Bitcoin is increasing over time. And as the adoption increases, you're going to have greater overlap between traditional investors and crypto investors. And if you're having an overlap, if a group of people now holds both Bitcoin and the S&P 500, then they're more likely to buy and sell those assets based on the same characteristics. So that's really the primary reason why you're seeing an increase in correlation between these assets, the rising adoption and the overlap between the investor group that holds both assets. Okay, so this correlation is rising. It clearly is somewhat of a concern. And why does it not worry me, in particular? So 4 key reasons here, and they're all related to my belief that these strong correlations won't persist going forward. So first of all, if we actually just look at that correlation between Bitcoin and the S&P 500, yes, it is strong at the moment. But what we can see is that the correlation has fluctuated historically. On average, the correlation has been about 0.1. So, given the correlation has fluctuated historically, I think there is good reason to continue to expect that correlation to fluctuate going forward. There have been times in the past when the correlation between Bitcoin and the S&P 500 has been strong, but that hasn't implied that it's going to remain strong going forward. And I think that primarily remains intact going forward. I expect the correlation will lower again in the future. And there's lots of reason for this. So the first one is actually just looking at the relationship between other asset classes. So as an example, if you compare the correlation between gold and the S&P 500, what you see is a similar relationship. Not exactly the same as Bitcoin and the S&P 500, but that the correlation between gold and the S&P 500 fluctuates over time. There have been times in the past when gold and the S&P 500 have been strongly correlated with each other, and there have been times when they've been weakly correlated with each other or negatively correlated with each other. And on average, actually, the correlation between those asset classes is very similar to what I just showed you on the previous graph. Between gold and the S&P 500, the correlation is about 0.1. So there's historical precedence here of other asset classes also seeing fluctuation in the correlation. And as I said, I think the same thing applies with Bitcoin. So, and then maybe thinking a little bit more kind of fundamentally, I said that the reason why you're seeing a rise in correlation is because you're seeing this overlap investors, greater penetration, greater number of traditional investors holding Bitcoin. But of course, that proportion of investors or type of investors that are holding Bitcoin can change over time. And there's evidence to believe at the moment that we are seeing a shift in the holders of Bitcoin away from traditional investors again. Or at least, even if it's not exactly away from traditional investors, at least towards long-term holders rather than short-term speculators. So what I'm showing you here in this graph is a piece of on-chain data which shows you the percent of Bitcoin supply that is held by highly illiquid addresses. So addresses where the Bitcoin hasn't moved in a long period of time. And it's the actual amount of time is more than 12 months. So longer than 12 months, less than 7 years. But essentially what it's just showing you is that the illiquidity of addresses, you're seeing a greater illiquidity in addresses. This implies that a greater share of Bitcoin is being held by long-term holders. And that speaks to this point that I'm making, is that we're seeing Bitcoins being moved to the hands of long-term holders. And that implies, by default, that it's less held by short-term speculators. And that, once again, that suggests to me, it kind of gives some motivation for why this correlation could eventually break down going forward. And then the fourth factor here is that, the rising correlation does make sense during, what I would call a liquidity winter. There's no doubt that both equity markets, and in fact all asset classes in the world, are all driven to some extent by central bank liquidity, right? Lower interest rates, greater debt floods into financial markets and impacts most asset classes, impacts equity markets and Bitcoin both positively. And when that liquidity is withdrawn, it tends to have a negative impact on those asset classes. So it's no surprise, the moment we're in what I would call a liquidity winter, a period of tighter monetary policy, higher interest rates, higher bond yields, stronger dollar, flatter yield curve. These factors are tightening liquidity, negatively impacting the performance of equity markets and crypto markets and Bitcoin. So it's no surprise that we're seeing that weakness at the same time. And I thought it was interesting how I looked at actually the relationship between the correlation that we looked at the start, so the correlation between Bitcoin and the S&P 500, which is that same blue line that I'm showing you on this graph that we saw earlier. It's measured on the left-hand axis, with high correlation and negative correlation. It's fluctuating, and at the moment it's a high correlation. And then I've overlaid performance of Bitcoin. It's a 6-month change, 180-day change in Bitcoin on the right-hand side, and it's inverted. And what you can see that there's actually a little bit of a correlation between the correlation and Bitcoin itself. And it makes a lot of sense. It speaks to exactly the point I've just made, that during times when Bitcoin is weak, that is when you tend to see this stronger correlation take place between Bitcoin and the S&P 500. Why? Well, exactly as I explained, because generally the primary cause of that is this tighter liquidity in traditional financial markets, negatively impacting both Bitcoin and equity markets at the same time. Now, of course, that's not going to persist into perpetuity. We are in this liquidity winter at the moment. Chances are the correlation might remain reasonably strong until that liquidity winter is over. But when it is, I would expect the correlation to adjust and the differentiated return streams to reemerge. And then the last point to make here is that, for me, even if the correlations were to persist as strong between Bitcoin and equity markets, I would still argue that Bitcoin remains attractive, right? Because it is, first of all, is clearly a fundamentally different technology to equity markets. I mean, that's really important to remember. Of course, equity markets and Bitcoin are not exactly the same thing. They can trade similarly for a period of time, but technologically they are very different to each other. And Bitcoin as an asset has exponentially higher return expectations because adoption levels are still low. This is potentially a revolutionary technology, and I expect adoption rates to continue to increase. I mean, while we said earlier in the video, of course, adoption rates have increased a lot over the last kind of 5 to 10 years, but they're still pretty low globally. And as that adoption rate grows, we could still see exponential returns from Bitcoin and crypto markets going forward. So even if the correlation were to be strong, which I don't think it will be, but even if it were to be, I still think that Bitcoin remains far more attractive than equity markets over a long period of time. All right, so main conclusions here for me is that there are reasons why the correlation exists. It's not always been strong, and there's reasons to believe that it will revert. And there are lots of reasons for that to exist. And for me, it doesn't mean that it's going to break immediately. So, of course, it's something to keep an eye on. I'm not saying that one should ignore it altogether. But long term, Bitcoin is a very unique asset. Its value proposition is strong as ever. And I'm not overly concerned by the rising correlation that we see at the moment. All right, thanks very much. Please shoot through any questions, like and subscribe the channel, and we'll be in touch again soon.